The Bank of Canada has made a significant monetary policy adjustment, lowering its key interest rate by 25 basis points to 2.5%. This marks the first rate cut since March, signaling a shift in the bank's assessment of economic risks. Senior Deputy Governor Carolyn Rogers highlighted three primary factors influencing this decision: a further softening in Canada's labor market, diminished upward pressures on underlying inflation, and reduced upside risks to future inflation following Canada's removal of most retaliatory tariffs. The global economic landscape has shown signs of slowing, with cautious consumer spending and moderating employment gains in the United States. Inflation in the U.S. has seen a recent uptick, partly attributed to businesses passing on tariff costs. While China's GDP growth remained resilient early in the year, it now appears to be softening. The Canadian economy has been significantly impacted by U.S. tariffs and trade policy unpredictability. Second quarter GDP saw a decline of 1.6%, with exports to the United States falling sharply due to both payback from earlier activity and the dampening effect of tariffs on U.S. demand. Key sectors like automotive, steel, and aluminum are experiencing profound effects, with additional tariffs from China and the U.S. spreading impacts further. Business investment contracted as companies paused plans amidst elevated uncertainty regarding U.S. trade policy and concerns about weakening domestic demand. Despite some resilience in consumption and housing activity, future household spending is expected to be weighed down by low population growth and a weaker labor market. Employment has decreased in recent months, pushing the unemployment rate to 7.1%, with job losses concentrated in trade-reliant sectors and slowed hiring intentions elsewhere. Wage growth has also eased. Inflation remains a key consideration. CPI inflation stood at 1.9% in August, with core inflation measures around 3%. While the upward momentum seen earlier in the year has dissipated, indicators suggest underlying inflation is stabilizing around 2.5%. The removal of retaliatory tariffs is expected to lessen upward pressure on certain goods prices. However, the broader disruptive effects of trade shifts will continue to add costs and weigh on economic activity, with the full extent of pass-through to consumer prices remaining difficult to predict. The Bank of Canada will closely monitor evolving trade relationships, business investment, employment, household spending, and the transmission of trade disruption costs to inflation. Their focus remains on supporting economic growth while ensuring price stability through this period of global uncertainty. If you like our content, don't forget to like and subscribe to our channel, News Today.